Everybody, Courtney Smith here, the unfettered Courtney Smith, not the lockdown Courtney Smith. No, that guy doesn't even exist. So let's get into some unfettered analysis and some unfettered disclaimers. So really, it was quite a bullish week, in my opinion. We did the breakout, which was very weak a week ago, but we solidified that this week. So things look good. I talked about the momentum divergence on the RSI, and sure enough, the market sold off as expected. But remember that when we look at a daily chart, the momentum divergence is only a short-term indicator, and now we're off to the races again. Now, buying pressure really started to move higher. Selling pressure was lower, just as you'd expect in a bull market, but also too, the ADX turned up. Now, as you can see, we've had some little teeny periods when the ADX moved up, but not that many. But this is the biggest move up we've had since all the way back here in March. Now, what this means is, particularly if it continues, is that we're in a bull market. It's a confirmed bull market. We're not in the sideways market that we had been in for almost a month. So this is a bullish indicator. Now, it's only on the Dow, which is only 30 stocks, but still, it's a step in the right direction. The NASDAQ continued its bullish ways, but the most important thing was that the purple predictor accelerated to the upside. It's now quite bullish for the NASDAQ. So as you can see, as we've gone through these three charts, there's just this little drumbeat of positivity. So that's fantastic. I am looking for a bear market later this year. But for now, no, I think we're going to continue to move higher. We got to be long and strong nearby. We got to be short and strong later in the year. So seasonality, we're still on a neutral signal in the broad market, but down here in utilities, they are breaking up. So we're putting them on a buy signal, and I'm going to be buying utility stocks right away. So that's one big change. Now, one thing that had been making me nervous was the purple predictor, but look at how the purple predictor just popped up dramatically. We got through our little diporama over here, and now you can see seasonality for the most likely scenario, which is green, is now bullish. So that's going to help us out as well near term. In fact, it's going to stay bullish. Let's just look at the green and the blue. We might get into some sideways price action here in July, but we've got a good month ahead of us for making money. Yield curve, it's like the Fed is listening to Wall Street winners and saying, oops, we better not let it get to negative anymore. But it's not really wildly positive. So before I can get really bullish on this stock market, this is not good enough. Asset allocation, moving in a bullish direction. Money's coming out of other markets, coming into the stock market. That's what's supporting it. Risk indicator, generally bullish. You see what's happening here? None of these are wildly bullish, but they're all just solidly bullish. So it looks like a solid bull market. Now, my scenario remains that we're not going to break the all-time highs that we made. We're going to approach them and then fail to make new highs. Global shares also looking good. It's always good when you can have the breadth of the whole world working in one direction. Always good for every market. Bonds, I think once again, we probably went down too far this week. I think we're in a sideways trading range. Purple predictor is getting more bullish, which is one reason why I think Thursday's dip below support was a bear trap. And instead, we're going to pop back up to the, let's call it the 165 level, something like that. But this is neither a bull nor a bear market, so we need to just stand aside. Bond key factors. The blue arrow points to 10-year treasuries in Germany. They're going up, and that yields are going up, and that is putting pressure on the U.S. treasuries for their prices to go up, for their yields to go up, which means these prices would go down. I don't think so yet, but keep that in mind. Oops, there we go. Now, dollar broke down. futures and CFD traders should obviously be short right now. Stock traders, you can go short euro versus dollar by FXE, but you know the profit potential is pretty limited. Okay, gold had the big triangle formation. I talked about this last week. It had the triangle formation and it broke out and then it came back. And if you extended the downward slanting blue line, you would notice that it's provided support for the market. And that's a pretty common thing. That's called a throwback or a pullback. And now the bull market is resuming. So we got out of a little of our gold positions. I remained long gold through this dip, painfully long through this dip. But now we're starting to make money. You can see Friday was a very strong day in the gold market, and we closed near the high of the day. Look for it to continue to be strong this week. Our indicators are bullish to neutral on gold, but fully paid up members, our super indicator, well, you'll see. Oil did very well. We got into the consolidation that I told you about, but Friday it looks like a breakout. Now there's heavy resistance between, let's call it 36 and 41. I think it's going to be very unlikely that we get above that. But let's see how global demand shapes up. Remember, too, that it was June 1st that all of those supply cuts were going to click in. So maybe that's it as well. Bitcoin, chop. It's now trading at basically the same price it was a couple months ago. Purple Predictor has also kind of degraded a little bit, so it may not break out of those highs. I'd have to call myself ever so slightly bullish, but I have no position at this point and frankly don't really want one. But maybe next week. Let's take a look at it again, but I might buy a breakout above those highs, just above 10,000. All right, everybody, thank you very much, freebies, for being here. Fully paid up members. Hang on for just a second. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.